What's up, everybody? This is Mike, the tactical stock scalper. I have a wonderful guest today. Today is Kenny. If you're in a Khmer server, his name is Theta Trader Kenny. We're going to be talking about Kenny's journey to retirement with high-end dividend funds. Kenny, I appreciate you joining me today, man.
Thanks for having me, man.
So, before we get into the meat of it, which everyone's going to want to hear what you're strategizing and how you intend to grow your accounts and stuff, let's start off with you. What was Kenny like as a kid? Where'd you grow up? Tell us a little bit about your younger self.
I My name is Kenny. I grew up in Jamaica, in Spanish Town. My family, I grew up majority of my life in the town. My mom sent me to live in the country when I was 8. So I learned that side of it. So I spent 2 years there. Came back to the town, and I was always fascinated by numbers. So I was really good at math. Sucked at English. And yeah, I lived in Jamaica until I was 22, and I came to America in 2006.
Oh, that's
Um,
awesome. So you went to like high school and everything in Jamaica.
yes, yes, yes. I did everything in Jamaica.
Did you play?
I
Oh,
came.
I'm sorry. Go ahead. I'm sorry. I'm
Yeah,
sorry.
I played soccer, and then I played cricket. I ran sports. I was 1 year ahead of Usain Bolt, so I didn't have to run against that guy. Uh,
Thank goodness.
Yep, I'm kind of
Goodness.
happy. Yep, I dodged that one, right? Yep, I dodged that bullet. 'Cause that would have been embarrassing. I would have probably
Nothing
quit.
will humble a runner like trying to
Yep,
go against the bolt.
yep. I'm so happy I didn't have to run against that guy. Um,
That's
but yeah,
awesome.
it's you appreciate growing up in a third world country, especially when you come to America because you see people take a lot of things for granted here, and back there, those things are worshipped.
Yeah, like
So
for instance, can you give like for people
um,
that have never lived in a third world country, like
just the ability of knowing that you have 3 square meals a day. You know what I'm saying? Like you
hmm
don't need to think about it. You know what I mean? It's 3 square meals a day. Schools are giving you lunch. You know what I'm saying? Like all these things where my kids go to school and the school provides lunch and everything, and I'm just like, this is crazy. Like my mom got to be finding money for us to go to get lunch to go to school. And you have government substance, but that's like the worst food in the world, right? Um, and it's still terrible. And to see, in America, your kids get food. You don't have to pay tuition for kids to go to school. I'm talking like high school. You have to pay tuition to go to high school there.
wow,
Yeah, and I'm not talking private school. So it's
whoa,
yeah. And like when you get a book list every semester, and it's a whole bunch of money for these books because everybody's trying to keep the poor more poor, so they're gonna increase the price on everything. So you're in a position where unless something happens to pull you out of the bottom, you always be down there because you can't. There's no scholarships back then. There's none of this stuff to get you to the next point. You know what I mean? To get you to college, none of that stuff. Those things aren't available to the average person. Scholarships are available to private school kids or the top 4 schools in the country. So like now, these things start coming in now, but back then there was nothing like that.
so if your family couldn't afford high school books, etc., you just drop out and work.
Yeah, so a lot of kids, like, you have government substance, and then you're going to the worst school in your city. And if you go into the worst school, that means you're mixing with the worst people. So like for me, I passed for the top one of the top schools in the country, but we couldn't afford the tuition. So I had to go to the worst school in my city because I couldn't afford any of the other ones. So I could have go to any one of the schools in my city, but we couldn't afford them. So I had to go to the worst school. And like once you put that uniform on, everybody know. You know what I mean? Like the jokes already start. Like, can you go to the
Right.
worst school in town? Because the academic show, and we don't have Spanish, nothing. All you got is English. You know what I'm saying? So like when my friends are like, we got Spanish, and I'm like, yeah, okay. I remember it on Sesame Street. You know what I'm saying?
Right.
Like, yeah, so that's basically what you face with, right? So it's a hurdle, and you come to America, and you see, what I mean, you see people with opportunity, and they just joke it away.
Wow, that's Kenny, that's a fantastic perspective. So can we progress in your life for
Yep,
just a minute here with
yep.
the next question? So you come to America
Hmm.
after leaving Jamaica, and I see you're if everyone looks at the screen, they see you're in a Navy uniform. What would make you join the Navy after coming here to America?
The when I was leaving Jamaica, I told my mom that my first goal was to find a way to to get her here, and the military was one of the ways where I could get my citizenship. So I joined the military 30 days later. As soon as the day my green card showed up is the day I went down to the med station, just like
Wow.
that.
Did you get your mom here?
Yes, my mom is
Oh,
here. She's doing her thing.
that's awesome.
Yep, yep. That was the plan. I told her that we're gonna get out of this, and that was it right there.
Kenny, this is fascinating. I had no idea. I've talked to you many times, but we always talk about stocks and options and
Yeah,
stuff
yeah.
like that. Oh, wow. Okay. So
Hmm.
we talked about you growing up in Jamaica and then why you joined the military. So when or how did you find out about the market and what got you interested in that?
So when you join the military, you the first like 5 days they introduce you to the thrift savings plan. It's basically a 401k for the military. So that was like my first introduction to the 401k. I was only putting in like 1%. So in 2016, I was putting in like 5% for the longest, right? So in 2016, I had to be a command financial specialist. So I had to go to finance school. So there was a 401k millionaire that came there to speak to us. So, he could, mentor us to say, hey, this is how you let guys know investing in their money when they're 59, they can have 1 million in their account. So I took that and I said I wanted to know what was in these funds, because they had a fund that was basically the S&P, but I didn't know anything about the S&P. But me being me, I want to know what it is. And
Hmm.
once you open that door to the stock market, everything starts rolling out.
It's on.
So
It's on.
yeah, yeah, it start rolling out, and it turned into just hardcore research and just going and just learning and learning. And with that, I started investing my 401k heavily, because I'm learning more and more and understanding everything. And that was the path that led me down, like start getting me down this road.
Okay. Do you remember? So okay. You got interested in 401ks. You took the finance class. Do you remember your first trade ever?
Yes.
Every trader
uh
does. Tell me about it.
yes. So it was on Spy. It was
Oh,
on
out the
Spy.
gate, you're riding the horse. Okay.
It was on Spy, and I literally bought. I had like $4,000 in my TD Ameritrade account. That was the account that I had, and Spy was at like, I think Spy was at like 280 at the time, something like that. And I bought like 10 shares of Spy, and Spy went up like 50 cents. I sold it.
Profit is profit, they say, right?
Yep, yep, and I sold it, and yep, that was the first one. That was the first one.
Your first trade was a winning trade. That's awesome,
Yep.
man. What as you and I trade a lot, and we know that's just not the norm, to win all the time. So did that boost your confidence, and did that make you want to get more involved in trading and ultimately into options?
It boosts it gave me the confidence, but what I wanted was, I wanted to be able to, to generate more, but I couldn't, based on the amount of money, and I didn't want to do penny stocks.
Hmm.
So I wanted to find another way, so now you start you start looking around in the market, and when you're looking around the market, there's an options door that says, "Come on in, it's
Yes, sir.
fine."
It's
So
warm in here, baby. Come on
yep,
in.
yeah. So that slowly led me into start finding out what options are, and I literally stopped touching trading, and for like 4 months, all I'm doing is just learning about options. Like, I didn't want to do nothing else, just learn about options. That's it. That's all I was doing.
When you went in options, did you start paper trading or did you say, screw it, and I'm throwing real money in on my first option trades?
No, I didn't do any paper trading. What I did was I went on Thinkorswim. They have an on-demand feature,
Mm-hmm.
and I was going back in time to see what would happen if I would buy calls on SPY at the open, like for like the last like 5 months in a row. What would happen? So like I didn't know about back testing or anything, so I was just scrolling. So like day by day, so not like on a daily chart, on a 5 minute chart.
Okay. Oh,
Yes.
nice candles the first 15 minutes of open every day.
Yeah. So like I was just looking to see what would happen if I buy calls, because I was so scared of like buying puts. Because you're so green, right? You're so green in the
Mm-hmm.
market that the only thing I can think of is calls. And I ended up buying calls one day, lost like $15, and I was devastated because I'm like, this thing don't work, and
Yes. Yeah. No,
back to
I'm
the
not
drawing
laughing
board.
at you. I'm just laughing
No,
because
not
every option, anyone that's ever traded options, as has to go through this process, right? So it's just fun to hear someone else's story when it's very similar to your own.
yep. Back to the drawing board. And I kept doing the same cycle over and over, winning a couple, but I kept holding on to that $4,000. I'll get to 4 5, come back down to four. I kept just staying in the same range for all of 2018, until 2019 came around, and that was when I hit the turn, and I started thinking, what else can I do? And I came into the you can sell options world.
Hmm. Okay, let's go into that. These are one of my favorite ways to trade. So, did selling options, much like the high yield funds do, right?
Hmm.
Did that appeal to you more than buying them?
It didn't initially, until I spoke to someone, and that was like the turning point, that you in a stock in investing, like, you need to have either friends or a mentor or somebody, and they let me understand, like, getting small wins add up over getting a big win, because I was just trading in and out, and I'm basically winning 30% of the time, and I'm barely breaking even. While if I keep getting these small wins selling, I'm gonna end up over, what I mean, I'm gonna end up higher over time.
Yeah, so
And
you learn the value of base hits trading
yep,
wise versus home runs.
yes, and that's how it resonated with me, and I I got up enough confidence to decide that, hey, I'm gonna give this thing a shot.
I love it. So let's fast forward now and let's talk about these high yield funds.
Okay.
When they first came out, like how did you come into these? Like how did you find out about them and what were your initial thoughts?
So I learned about Testly in February, because I just got out of I got my account recovered from last year, because last year I had some meta problems I was dealing with. I was stuck in some meta puts last year, as you can look on the charts. So I recovered out of those. So I was looking for stuff to trade, right? And with me looking around, I was on my Webull app, and I saw like Tesla was like the number four most like added thing, and I was like, what the hell is this? So now I see it, and I saw the yield on it, and I didn't like read the prospectus or nothing. So when I look and I saw the dividend, and I was just like, "Oh, this is okay." So I started looking into the dividend now, and I started looking into the fund, and I see they were doing synthetic. I never did synthetics before. I understood it, but I never did it, so I never really like researched into it to fully grasp it. I just understand like you're simulating a stock at the time. So I wasn't that into it. When then I decided, my job was being changed and I wasn't gonna have enough time to trade. So I needed to still make money. And I was like, if I could give my money to Yieldmax, they could make money for me when I'm not here. If I gotta go on deployment or go out to sea or whatever, right? So I said, okay, I'm gonna start researching these funds now to see exactly what was going on with them.
And what did you think initially?
So initially, when I seen it, I said, this thing can work. All we need is a stock. Like I never saw it going as crazy as like Coney is doing right now. But
Hmm.
like I saw it, I saw in the back of my mind like it could go up slowly over time, not as fast as like Coney and Square, but I saw like it could go up over time slowly, and that was like my buying point was the 5 to 15% out of the money because at the money calls, they cap you right at money, right? So that
Hmm.
could be a small issue. So that was like my turning point right there was the 5 to 15% out of the money that gives the fund the ability to recover from the dividend drop or whenever the stock goes up.
Yeah, let's get into this a little bit. That was mine too, Kenny Biggs. Completely honest with you. When I saw Tesla was doing 5 to 15% calls out the money, I thought this is great. You're going to catch some of that upside because we all, as we know, Tesla is very volatile, right? So we want to be able to catch some of that upside. We don't want to miss out on it. So
Yep.
through time, Tesla has changed their prospectus, okay,
Hmm.
and they've gone to 0 to 15%.
Yes.
Um, what are your thoughts on that? And does it change your outlook for the future on Tesla specifically?
I, I knew you was gonna ask me this question.
Well, I had to.
So no,
Had
no,
to.
it's good. You're a good interviewer. You're asking the right questions. So this is so I went into the fund, right? with with the 5 to 15%, how the fund recovers, right? I want the high yield, but I also would like some form of recovery, right?
Hmm.
So when we look at it and we say, okay, he puts 0 to 5 to 15 because he wants to do whatever it is needed to be able to get the 50% yield at the time.
Hmm.
If Tesla becomes volatile, he will adjust to 5 to 15, just like he's doing with Coney right now. So right now he's really tight because there's no volatility. But if we get the volatility like 2 weeks in a row, he's going to adjust those calls. That's my expectation, right? So that's where I will monitor him to, to critique him to say, all right, this is week 3, and you still not, what I mean, you still haven't adjusted your strikes 3 weeks in a row. So that is the expectation. So for me, I take the income from the fund. I am not reinvesting. I'm taking the income from the fund because I believe Tesla will go up. Tesla will go back up.
So you're taking so you're taking your dividends, your
Yes.
disbursements. People are going to call it whatever they want to, but you're taking
Yes.
that money that you get every month, and you're
Yes.
not reinvesting it. What are you
Yes.
doing with it?
So that money goes into the other side of my strategy, which is basically I call it the hood strategy, high income option dividend strategy, right? So what happens in my account is all my cash is held by Yieldmax funds, and then those funds are giving me margin to trade options with to create additional income on top of the dividend that I'm getting from Yieldmax, and that all that income pays down my margin debt every month. And the ultimate goal is to make my account to pay off the balance of all my margin. That is my goal for that. So once my margin balance is paid off, all these funds are basically debt free, right? So they're just providing
Yep.
me income while they're there. And some people say, yes, your cost basis is here. My cost basis doesn't matter if I got all my money back.
That's right.
It's just sitting there providing me. So if right now Tesla is paying 80 cents, and if in 3 years I get all my money back and Tesla is paying 40 cents, I got 40 cents for free.
hmm
So that is how I look at it. And at the same time, I got my money back. I can buy other funds with that money that I have back.
Okay, so if we look at your um, your account up here, and we're
Hmm.
going to go through the shares. If everyone could, if they want to look at this, they can. You got 3K shares of QI.
Yes.
You have 3,122 of Tesla.
Yes.
Out of those two, currently, even with the low dividend disbursement, whatever, from QI being released here, which is your favorite, and which one do you think has the greater potential for your plan?
They're different funds. So
hmm
I have them for different reasons in the sense. So for Tesla, Tesla has the greatest potential, right? Tesla has the greatest potential based on, Tesla, right?
hmm
So Tesla can provide me a higher income based on Tesla's performance, while QQQY is my steady Yeti, my guaranteed around this range, and it will maintain its NAV more decent, but I will not see rise in the price as I have the possibility of seeing in Tesla. So I view them different, but they're still allocated the same because I want a certain amount of income.
Okay. What's your income goal right now to generate monthly?
My goal right now is $7,000 in dividends, $3,000 in options trading.
I like that. So
You want to
7K
ask
in
it?
dividend,
Yep.
3K in options, and
Yes.
you're trying to make this 3K in options by selling calls and puts primarily, right?
Yes.
Okay. Now, let's have some more hypotheticals. If you could only choose one to keep forever, all the rest are going to be eliminated from your account. Which high-end dividend is your favorite, and which one do you think would have the greatest longevity?
QQQY.
Okay.
And the reason why I would say that is there will always be a new innovation coming out, right?
Yeah.
So QQQY holds all the NASDAQ fund, all the new innovation funds, right? So there'll always be somebody swapping in. So yes, at some point, Tesla will plateau to where their volatility will not be there that much. You understand what I'm saying?
Yes.
But
Yeah. Absolutely.
the Nasdaq will still be the Nasdaq because it's still going to have all those speculative growth stocks in it. So
Okay. So
I go QQQY.
let's flip it. What's the worst one you bought, or do you have any regrets on buying any high-yield funds?
More the price. More the price. I didn't like the price that I bought Clip at, and I probably shouldn't have bought Tesla that heavily where I bought it at. I should have probably waited a little bit to buy my last 1,000 shares.
I got you. So it's not necessarily you don't regret buying any of the ones you have
No.
in your account currently. You just regret the purchase price and the
Yeah.
amount you purchased it at.
Yes.
Okay. So what are your ultimate goals with the account? Like, can you envision yourself in Kenny 10 years from now? What does that look like to you? And what are your goals in 10 years with these funds?
10 years from now, my dividend income 30,000 a month. My
Mm,
my option trading income around 60 to $70,000 a month. That 60 to 70,000 is going to be between my IRA and my trading account. So it's going to be across two accounts.
And you plan on retiring or still working
Oh no,
and
no,
having all that?
I probably will retire in 2 years once I retire from the military. If this account, if I have a good year next year and the year after, because I retire December 2026. So if I have a good year, 2024 and 2025, my account will be over 400K. If my account is over 400K with my pension and all my other stuff, I'll sit at home and just trade this and just trade the features, and
Oh,
that's it.
okay. So last question before we get out of here. I always like to know the negatives or think of possibilities in anything I invest in because I think that's just being prudent. I don't like to live with my head in the sand, so to speak. What do you think could wreck these high yield funds? What are some major weaknesses that maybe you've seen or could foresee that could really hurt us in the future?
That's a great question. So there's a couple things there, right? Is the first one is the fund managers paying return of capital when they don't have to. So like
Mm-hmm.
for today, where Defiance could have paid $1 and paid us return of capital, and they would have cut that fund by 40%, 40 cents. You see what I'm saying? So
Mm-hmm.
things like that will hurt these funds because 40 cents that's like the amount that we dropped the other day on QQQY. You see what I'm
Yep.
saying? So
Mm-hmm.
things like that will hurt the fund where you're paying 40 cents when just to attract investors. That's one of the ways you can hurt the fund. Two, in a fund, even in QQQY and Tesla, not adjusting your strikes based on market condition. So if we're in a downtrend in market, it's better to not sell a put in the money. You might want to go two strikes out of the money on QQQY. And for Tesla, if depends on the type of market, you might want to adjust your strikes so we can get as much upward move. If the stock, like when I said the volatility increase, be ready to adjust so we don't lose 4 weeks in a row of volatile move to the upward side. You understand what I'm saying? Because we just gave up 4 weeks.
Absolutely.
Yes, so things like that will hurt the fund because if we miss 4 weeks of upward move with Tesla, and then you finally decide to adjust your strikes, and now we start going down, that's 4 weeks for the NAV that we missed out on. And then obviously, the pandemic crashes, right?
Mm-hmm.
Those things are going to affect everybody and the stock itself. If the underlying goes down, everything is going down.
So if I'm hearing you properly and thinking about this, you actually don't see a fundamental problem with the strategy. I know it's up to the fund managers, but you actually don't see a fundamental problem with the strategies themselves or the funds. As long as the fund managers can maintain it appropriately, you still feel that these things have a lot of longevity to them. Is that right?
Yes. So look at this, right? Not if you look at what they're doing, right? Retiring dividends is tracking Tesla, right? Let's just say if he was tracking every single one, right?
Mm-hmm.
We can see the money they're making. So we can see when they pay us ROC, return of capital when they didn't have to. You know what I mean? So we can
Right.
see when they're hurting the fund, you know what I'm saying, to bring the fund
Yeah.
down. Because when people talk about yield traps, it's usually when a company is not making enough money and they're just paying you return of capital to bring in more investors. You understand what I'm saying? So
I
like
understand exactly what you're saying. Yeah.
that is the thing there, right? Because again, if you're buying the fund, you're thinking the stock is gonna stay flat or go up. That is what you're buying the fund for, right? We don't control where the stock goes, but that's what you're buying the fund for. So that is my vision of the fund. I don't have the vision on all of them. Like some of them I don't like them. You know what I mean?
Mm-hmm.
I'm talking like Murney. You know what I'm saying? Some of them I don't like those companies, but everybody has their own, right? So if you envision, Apple gonna be here in 10 years, you collect the premium going up. I'm an option seller, so I know there's somebody waiting to buy this contract. So we sell it to them. But what I don't want is you giving me money that you didn't get from a contract, because then you're hurting the NAV of the fund, and the fund slowly goes down.
I think that is so important, and now I'm kind of wishing we would have started with that part because I don't think people understand this, Kenny, is when they are taking money out the NAV. What they're doing is they're flashing $100 bill in front of you, and people grab the distributions. They're so excited about it, and they don't understand that the fund is actually taking money out their back pocket while they're holding up the shiny $100 bill in front of them by taking money out the NAV versus what Defiance just did with QQY is saying, yeah, we can pay you more, but we want to preserve the NAV. We want to
Yes,
preserve the
reserve the
stock
NAV.
price.
Yep.
And how much better that is for the longevity, I think, of these companies if they do that versus the shiny distribution. What's your thought on that?
Yep, and that is good. And one more thing I forgot to say, right? And there's two sides to it, right? Because remember, they can pay us out of the call money they receive, or they can pay us out of the synthetic if they made money out of the synthetic. So as long as the dividend is coming from one of those two, it's fine. If the dividend is coming from somewhere else, that means they didn't make the money. You understand what I'm saying?
Yeah, yeah.
Yep. So
And I think
that's what I want to clarify.
I just think there's a lot of people that are uneducated. Maybe they're educated now in how the calls work and all that, but I don't think people look at the bigger picture of these funds when they do take out the NAV and how that really affects you. They're just literally stealing your money in essence. I mean,
Because
maybe that's too harsh, but that's kind of the way I feel about it.
like you look at Coney right now, every week they've been getting blasted on Coney calls, right? But they're making so much money off the synthetic, so they can just pay you $2.50 out of the synthetic, which is, you know what I mean? Which is basically you receiving money there. What we don't want is them, they didn't make any money off the synthetic or any money off the calls, and somehow we're getting paid money.
Yeah, no, we don't want that. No matter how shiny the dividend is, we know it's going to hurt us long term.
Yeah. So, yeah, that's the take there, brother.
I love it, man. You are fascinating. I loved you growing up in Jamaica and that success story of coming over here. And I love doing these interviews, man. That was spectacular. Um, Kenny, I want to thank you very much for taking time out of your day and doing an interview with me. I think this is going to be a great watch for people, man.
Yeah, brother. Yeah, thanks for having me, man. Appreciate it.
I appreciate you. All right, everybody. Hope you enjoyed the video. All right, we're out.